I mean, you're talking, Austin, you're talking about how agents hyper optimize. And that's one thing that we've learned. If there's anything that they're awesome at, they almost over optimize. And I guess my question would be, in that world, and I think you alluded to it, do money markets win? And the reason why I'm asking that is because if I'm an agent, I want that interest to come to me, not to go to the stablecoin issuer. And do they start, like what prevents that? And then I guess the second question is, what's the freaking difference between a money market fund and a stablecoin when you step back for a second and you ignore wrappers and other stuff and just say, like, fundamentally, if it's the same risk and I get interest in one, I don't get in the other, why would any agent go into the stablecoin space?
All right. So I'm going to pile in on that one and say this is something that clarity is actually quite important for, Chris, because the distinction between payments products and investment products has a lot to do with the legal structure in the United States, right? So like rewinding the clock for people, and putting on my business school professor hat for a moment here. We had the 1933 Banking Act. We had the 34 and 40 Act in the securities space. We subsequently had the BSA, which is technically handled by banking regulators, not the securities regulators. And we have this proliferation of agencies in the United States. If you're in a place like Japan, where they have the FSA, and you go over there and explain to them, we have somewhere around 19 regulators who touch all this stuff, they look at you like you've grown a second head because it sounds kind of crazy. But here in the United States, we do have like this divide in our regulatory apparatus. You have the SEC and CFTC on the investment side, which helpfully aren't even the same agency and often don't agree with each other. And then you have all the banking regulators who don't agree with each other, or the SEC or CFTC, and vice versa. So, Chris, I think we've had this market fragmentation because of the structure that Congress has created. And one of the interesting parts about clarity to me, and we'll talk about whether it's going to pass or not, is as we're having the discussion around digital assets, as we're having a compromise around yield, and Gordon, I would love to get your opinion on that in a moment. One thing that I'm seeing about this whole thing is that inadvertently we're probably highlighting how weird the US framework is and giving a big advantage to the people who can move between the different aspects. Because here's the honest answer. An agent probably wants a money market fund that pays incrementally if the money is at rest. But the moment it wants to pay somebody, it wants that thing wrapped into a stable coin to make a payment easy, just because, if nothing else, the paperwork implications of paying for things with securities and who can receive them is awful. So because we have this weird fragmentation, I actually think it's going to be the people who are transformers, aka people who can move between one state to another. Like, now I'm a stable coin. Now I'm a money market fund. Now I'm a bank deposit. Wait, I'm a money market fund again. No, I'm a stable coin, who will ultimately be the winners here because you can optimize across all of those channels, which is why I'm paying increasing attention to integrated stacks, like, say, on one hand, to go crypto native, circling Coinbase, and on the other hand, say, what's JP Morgan going to do? So, Gordon, let me throw that ball to you. I know you have some.
Yeah, I think you're doing the selling full circle almost. We have the largest regulated stablecoin, but we also have the largest tokenized money market fund, USYC. And people could go between them. And, as you rightly pointed out, one is a payment instrument. Other one is if you want to get the money market yield and you go through the typical type of requirements, then you get the USYC yield. And moving in between them, we offer a seamless process. And perhaps agents some days will make that even easier. But, there is also some friction at the end of the day, right? It's why is there $3 trillion of physical cash in the world? Why is there non-interest bearing deposit accounts alongside with savings accounts? There's always some type of delimitation, even if it's offered by the same institution. And I think you're always going to have both, not just one versus the other. And
Chris, what do you think? To throw that ball right back to you.
No, I think you're right. I think you're going to see an interoperable capability. I do think you'll see. There's a lot of there's a network effect when enough people have accounts with money market funds that you'll see more, ability to not, I don't want to say pay, but exchange them for value and goods or whatever. But yeah, I think that intersection is going to be very important going forward, and the agents are going to be very good at it.
If you like this segment, please like, subscribe, and tune in every Monday at 4:30 p.m. Eastern Time. I'm Austin Campbell, the host of Bips and Bips, along with my friends Ram Alawalia and Chris Perkins and our slate of exceptional guests. Every week, we're going to discuss macro, crypto, and the collision of worlds, covering topics that move markets and shape the financial landscape.
A 3% top off on my entire portfolio? Yes. Who is saying no to that? That's free money. I don't care what's in your portfolio. That's a yes. If you've been looking for an excuse to consolidate your assets, this is it. Until May 31st, Coinbase is giving a straight 3% Bitcoin boost on any crypto or cash deposits all month. Coinbase One is the ultimate membership to make the most of your money, which, as you know, is how I optimize my finances. Zero trading fees on thousands of crypto assets, 3.5% APY on USDC, boosted staking and lending rewards, and up to 4% Bitcoin back with the Coinbase One card. Plus, you can still claim 20% off the first year of Coinbase One annual plans, a $50 Bitcoin bonus when you spend $100 on a new Coinbase One card in the first 30 days through May 31st. Plus, your share of 5 Bitcoin if you outpredict pro basketball coach Lethal Shooter, and a chance at a private shooting session with him. It's the perfect time to centralize your assets and maximize your earnings. Get your 3% boost at coinbase.com/unchained. Visit coinbase.com/unchained. That's coinbase.com/unchained to claim your Bitcoin bonus. No purchase necessary. See rules and other ways to enter. Terms apply to other offers. Futures, swaps via Coinbase Financial Markets. Risk of 100% loss. Payouts event-based. Not investment advice. Not available in Nevada. Coinbase One Card is offered through Coinbase Inc. and Cardless Inc. Cards issued by First Electronic Bank. Bitcoin back rates are based on cardholders' assets on Coinbase.